This is the Friday, February 22nd, 2019 version of the Market Plus segment. Joining us now is Dan Hueber. Dan, welcome back.
Thanks very much.
Dan, we've got to start off right off the bat here with cotton, as I promised on the main show. We saw a lowered acreage for cotton. We also saw, of course, these Chinese announcements. Thursday, we rallied on that news, but Friday, we didn't close any higher. Why is the cotton market's not getting excited about this?
You know, of course, the cotton market has been struggling for weeks and weeks here. I should say more like months and months. And it, here again, been many disappointments. Going right back through harvest time, such a late harvest. We really thought the market would stabilize then. Just here about 2 weeks ago, we seemed to break down into lower lows once again. Had all the classic signs of a give up, a failure. The last of the longs want to get out of there. That said, the news is good. It's a good place to start. But on the same token, I think it's going to need a little something more concrete to start bringing people back into that market who are interested in owning it again. So, yes, if it really does turn out true that we're going to see that reduction in acreage, yeah, we've probably seen the worst of it behind us. But on the same token, we're going to need to see a little bit of spark in that export business to really start to carry us back in the other direction. So.
When you say put the worst behind us, you mean put in a low?
Put in the low.
Okay.
Yes. I mean, and again, even before the reports today, I was thinking that we probably would have a low in the cotton by March 1. And here again, I mean, all commodity markets, all ag commodity markets tend to, you get around the 1st of March, we shift sentiment a little bit. We start thinking about what acreages are going to be, what weather's going to be. And absolutely, it doesn't matter if it's corn, beans, wheat, cotton. At this point in time, we have no risk premium in these prices. And markets will tend to build in a little risk premium as we start moving out towards those months where there is risk. And those are just in front of us right now. So,
when it comes to acreage, we got those released this week from the USDA Ag Outlook Forum. Why did the market react so positively on 92 million acres of corn and 85 and some change on soybeans?
Well, of course, the bean acreage, it had a little tailwind because of the Chinese news. So, I mean, I wouldn't say if that news hadn't been there, that acreage number in corn might even have been a little depressing. Yes, it was a little more reduction in beans than we thought, but of course, as we even spoke about before, at the end of the day, we still have a lot of soybeans around. So yes, like I say, without the Chinese news, it probably wouldn't have done much. But on the other side of the coin, with the increase in usage, we are looking at reductions in ending stocks with a good crop. I mean, that's basically with the projection of a trendline crop. So if there is any issues out there, and again, with no what you would consider risk premium in the prices here right now, you would say the downside is very limited here, and there's risk to the upside. So,
risk of the upside. So let's say, take a hypothetical here. We've got a question from Adam in Wisconsin.
Sure.
What are the chances China actually buys $30 billion worth of ag products just this year?
Without putting a dollar and cent to that, I'm not sure what that would equate to. Just knowing China, the way they
operate.
They, not that they wouldn't do some goodwill purchases as they did in December and then turn around and make some cancellations. So, sure, I mean, they will probably live up, at least initially, to some better buying, just to kind of grease the slide for make everybody feel better about how the relationship is going to go. But yeah, they're going to stretch it out over time. Like I say, it might be a little bit front loaded because they have been so absent from our market. But we also have to keep in perspective, unless they really have a commitment to build stocks, they're looking at reduced demand in that country with this hog issue. So it's, that also limits the immediacy of what they need to purchase at this point in time.
And the trading window for U.S. purchases is pretty much at the end of that.
Exactly.
Yeah.
Yeah.
Let's take another question here in regards to corn and soybean production. Lee in Slater, Iowa said, given the overproduction of corn and soybeans that we see in the upper Midwest each year, how many acres would we have to reduce in 2019 to see a market response to the upside?
Well, of course, if we're talking about average weather, then, yeah, we'd have to take a couple million acres out of corn. I actually want to hesitate when I say that. If we're already reducing carryout by another 75 million bushels or 80 million bushels in what they were projecting here this morning, I think one of the things we tend to get a little bit too focused on domestic only. And really, when you look at the world numbers in corn, we are by no means looking at a negative situation on world stocks or the trends. I mean, the usage is actually outpacing for the last several years now, the usage is outpacing the increases in production. So it would not take much of a disruption anywhere in weather to really change that pretty dramatically in the corn market. Beans, not so much the case. And boy, how many acres would we need to take out? I mean, 3 million cut is pretty nice. You could take another 3 million out of there just to really kind of get us back to a reasonable, what would be considered a historical norm for soybean ending stock. So chances are that's not going to be the case. So
we had an interesting discussion on the main portion of the show. During the trade section, Kirk Leeds, the Iowa Soybean Association president, said this is the marketing year. Really, the 2018-2019 is the marketing year. We're going to see more of an impact in soybeans. Would you agree with that?
Well, it's the one that would seem to have the best potential for some rebound and growth. I mean, just because we are so far behind the 8 ball from what happened over the last 8-9 months here. I mean, I think our soybean sales, if I'm not mistaken, are around 20-25%, somewhere behind where we were a year ago at this pace. So that means there's a lot of room to catch up. So, I mean, yes, when the market's already adjusted itself to the lower numbers, you know, that does give you a little more bang for the buck when it comes to turning things around and seeing business come back in as well. So.
Okay, this is a little bit of a marathon question.
Okay.
Philip here in Dresden, Ontario, we've got kind of a 3-part question.
Okay.
He said it would seem farmers want to believe being bullish December 2019 corn can be a real thing this year. What do the corn futures spreads tell us? What target price for December 2019 corn would fulfill those bullish expectations? And are there any black swans out there to make it happen?
Well, black swan, I mean, if I can address the last one first, I think the black swan out there is currencies.
Okay.
And I really think when you look at the, and you know, sometimes is it correlation? Is it just a coincidence that they happen to work this way? I think there is a correlation between the currencies, the dollar, and what the commodity markets do, be that corn, soybeans, wheat, any of them. And if you look over the last really 20 years, it's almost become a perfect inverse relationship. And even in the last year, we've had weather issues. We've had problems out there, but we've never really responded in the fashion that you might expect with some of the issues that were in the growing conditions this year. And I think unless the dollar does truly move into a downtrend, and I think the probability is good with the Federal Reserve now stopping the rate hikes, really start putting a halt on how what they're doing with their bond portfolio. I think there's a real probability. But without that, I don't think we're going to have, or it would be difficult to have a big enough weather issue to really take corn up and above that 4 to 420, you know, extreme 450 range. And that's really just been the upper side of the range market, of the corn market for the last 4 to 5 years. So is that going to be enough to do anything other than return some profitability? No. So it's we're going to have that outlying black swan to move us up and out of this range. So.
Okay, let's take another question here. Roger in Kokomo, Indiana. He said, now that we've seen the Chinese demand plateau and continued South American expansion, will the U.S. bean complex begin to mirror the soft red wheat complex, or their decline in that complex?
Decline in acreage. I'm assuming that's what he's saying, but you know the prospect of that is real. Now, granted, that doesn't happen overnight. I mean, we didn't give away the wheat, and I shouldn't say give away. We didn't have the wheat business of the world taken away from us overnight. It took many years for that to develop, but I think that is something, if you look over a decade time perspective, you know, absolutely, South America could become much more aggressive. I think I even read an article this week that some of the indigenous tribes in Brazil are very interested in expanding farming practices because, you know, for them it's a source of revenue as well that they have not had in the past. So how many acres that can amount to? You know, I've heard as much as 50, 60 million acres in South America. You know, here again, if that really comes to fruition, yes, I mean, that changes us to the residual supplier, and not a good position to be in. So
definitely not, but maybe a discussion for another time.
Certainly.
One final question for you. Regarding the hog markets, we've got Brian here in Illinois. He said hogs are having a tough week. How much lower will they trade, and what has happened to allow them to recover?
Well, of course, the bounce yesterday was the first encouraging sign we've seen. Granted, they turned around and took that back away here today. You know, we've really got to clean up the weights. We've got to clean up the numbers that are coming in. Like I say, I think the market has been surprised that we have seen the amount of slaughter that has been over the last few months. Instead of expecting 2%, we're seeing 4 and 5%. Once that's cleaned up, I think we're in a better situation. And again, I think as we discussed a little bit earlier as well, there is potential as we move into the last half of 2019 to look at some better numbers as far as the export scene because of the health problems in the rest of the world. So granted, we've got to stop going down first, but here again, when you look at the slide we've seen really since the 1st of December, I think we've pretty well exhausted that to the downside at this point.
Okay. Dan Hueber, thank you so much.
My pleasure. Thank you.
Join us again next week when we explore how the pecan industry is working to preserve market share in the shadow of export tariffs. And Darren Newsom will join me at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.